All right, ladies and gentlemen, I hope you had a wonderful trading day. And even though today was crazy, we got our pump. We're waiting to see. We got the pump. We're waiting to see if it's the fake and the fadeaway, but they're doing the meeting right now. Vice Premier and Trump and Mnuchin and the trade stuff. But we will find out on the watch list, and we're going to be live in the morning tomorrow, 30 minutes before open. So all that's going to be important, but we're going to talk about the Uber IPO. They come out tomorrow, and I'm going to actually show you. This is no clickbait. This is real. So you better like the video and make sure you subscribe. I'm going to show you how to get free shares of Uber. Now, it's not always going to work. That's first of all, and it is kind of like a magic trick. So let me explain it very simply. This is how it's going to work. If the weather and all the stars align and everything works out to meet certain criteria, you are going to buy shares of Uber, and you're going to put, let's say you put in, I don't know, $4,000. And from there, the point should be, from there, the idea is you will have that $4,000 back in your account by the end of the day, or maybe the end of the next day. That's seeing, again, certain criteria. But you will also have at least 50 shares, maybe 100 shares of Uber in your account at the same time. So that's the magic trick. Do you guys see what's happened there? You will have all the money you put into the IPO, but then you'll also have the shares. So this is a stock trading strategy. This is playing the shares. You could do this on any brokerage, and tomorrow is when the IPO is going to come out. So I'm going to talk a little bit about it and what we need to look for and how you're going to be able to do this. This is my plan for it tomorrow. So again, you could come watch this happen live. We're going to do it here on the screen. That's why I want you guys to pay attention now and be up to speed with this. It'll be really, really cool to watch, and you guys could see this kind of in motion and see as the criteria develops and what we're really looking for. But as far as the IPO goes tomorrow, it's not going to be open right there, right at open. So it usually comes out 2 to 3 hours, or even like an hour and a half to 3 hours. I think about like 10 a.m. Eastern, maybe, so around 8 a.m. Pacific time, you'll see the IPO come out. It'll be trading under the ticker Uber. So literally UBER, just like that. Uber technology. So nothing comes up now, but you'll see it. Now here's IPO. Here's Lyft. You guys know Lyft. And now normally I would be going over the S1, and I'm going to show you. We're going to go over the strategy with another play, and we're going to talk about that. You guys actually got to see that play, and you guys made some money on that. But they're pricing at 45. This is important information, but usually go over the S1 and see, read up on the company. But honestly, it's very similar to Lyft, and that's what's crazy about this. This strategy, everything is just based upon supply and demand. It's the first day the stock's being traded. There's no history. We are just going to be gauging demand and then using a strategy of entering and exiting to, financial or risk management, whatever you want to call it, to set us up in a position. But you don't need to know anything. As crazy as that sounds, I usually do go in depth. Again, the more information, that's what I'm saying. Do you need to know it? Again, that's the market too. You don't need to know anything to get lucky. So at the same time, but at the very basis, there's only a few factors we're going to look for, and we're going to cover it all here in the video and see how it plays out. But at the same time, this is going to come out at like 10 a.m. We're going to watch for it. You can't trade options. Beyond just got options. You have to give it a few days. If there's certain amount of trading volume, they'll literally make a market. So you guys ever hear that term market maker? That's what that means, is that after a few days of trading, the banks and people are going to come together and say, yeah, we're willing to sell options. We're willing to buy the stock at this price or sell it at this price. And then they start making the market. They set the prices, and then you guys all hop in the pool as well too. Degenerates. But that's pretty much it for the basics of it. So it's going to come out. We're going to watch for it to come out. Now, this is how the strategy is going to go on the purchasing side. It's very, very simple. And you guys actually saw me try to accomplish this today. Now, I could have done it today, and I'm sad that I didn't, but I'm happy. Here's Workhorse. So here's Donald Trump's penny stock pump of the day, the Donald Trump alerts. Yeah. But the Workhorse is this is Workhorse and the electric car truck maker, whatever. But we played this yesterday, and we talked about this. We got it at like 160 or like, I think I'm in like 160 or like 150. So we're up here. But here's the idea of the play. This is what you want to do. I bought 100 shares of it. I was up. See, again, I lost 59 bucks. I'm up 42, and that's 25%. We were up a decent amount at some that, and that's just to break even. So it was up a lot more today. I could have done it, but I just liked it. And again, I honestly think it probably would have went up there, but I'm still holding it. I'm going to swing it. If I could do this, I'm waiting to do this strategy. I thought I could get it at a more optimal price. So again, this is going to be the same issue that is going to happen tomorrow when you're playing Uber. You're going to be debating with the same thing. Once you reach the minimum point to accomplish the strategy, when do you sell? So if you want to be as safe as possible and literally guarantee that you get free shares of Uber, and you guys understand this, well, maybe I'll say it afterwards, but you have to decide. Do you want to risk it a little bit more? If you want to go for more profits or more shares, that's on you. But here's the idea. You buy 100 shares, and this is what we're going to do with the Uber, and I'm going to tell you what to look for to see when it's playable, because it's not always going to happen. You buy 100 shares. If certain factors go there, and again, I'm only going to buy 100 shares. This is not saying right when it IPOs everybody buys it for no reason. No, because I actually wait. There's times that I have to wait, and if I don't see it, I'm not going to take it. But this is what I was let's focus on this play here. It's buying 100 shares. You wait till it goes up 50%, 100%. Again, this is based on how conservative you want to be. You sell out, get your initial investment back. So I could have done that yesterday with the 164, and then boom, it goes up. You literally now have shares of Uber the first day it came out. You could give that to your kids, do whatever you want, hold it forever, and then you just get all your money back. That's it. So now here's the question, when or how will that happen? You need certain criteria. Tomorrow might not be a play. Here are some recent IPOs. Here's Levi's. You see, it kind of did it, and guess what? I'm actually holding those Levi's shares, and I've been holding it, trying to do the same thing here. I liked it. I grabbed the 150, and I didn't pick up Lyft. I didn't do this with Lyft too, so that's the thing. We watched Lyft IPO, and we didn't do it with Lyft. We did it with Levi's, and this has to do something with Uber and Beyond. I didn't play Beyond. I honestly didn't know what it was, but it would have worked with Beyond, because here's the whole prospect. IPOs can move a lot, and everything, it's just like options now. With the first day, the best part is it's supply and demand. This is the first day it's going, so a lot of external factors are mitigated when it comes to how the price is going to be trading. But the main thing you're going to be looking for is a big price move. Again, and what I meant by option pricing is that literally we're looking to see if it's expensive or not. And that's the difficult part, because this is the first time it's coming to the market. The company's saying this is what we want to raise if the market meets there. So now let's start with the first factor. And I believe it happened here too. Beyond, I didn't play Beyond too, because I believe when I saw it, it met the same reason why I didn't play Lyft is the same reason I didn't play Beyond. So, but one, I had no idea what this was, but at the same time, it priced really high. So this is what it is for pricing. They're coming to hit the secondary market. That's you guys. So right now, the deal's already going to be done by the time the bell rings. Uber's going to get their money, and now you guys are able to trade it. All of us, if you're buying it on any brokerage or anything. So what happens is they're setting a price of what they want for the shares, and then when it hits the market, it'll go above or below that price. So if they price below their offering or under, it's showing kind of demand from banks, other investors that get the first take on it. So if it prices above, that's good for demand, which is awesome. But at the same time now, if it prices too far above, when it hits secondary market, all of the gains for it to go and trade at a higher price than that, all of the gains is going to the market maker. You're not if it prices too high, that's not there. That's honestly what killed Lyft. Lyft priced at like 60 and then opened at like 80. It was already, it was already up way too much, and how many shares. So Levi's, it priced, and now Levi's was good. It priced at the range, pretty even, fair. It priced like $1 or $2, I think, above like 19 or something. Nothing too crazy, but it's held too, and that's why I've been holding that one. But The next thing now is the amount of shares. Now, so again, the pricing is important. Now, this is what I'm saying. This is all related to the amount of shares, and this is all we're looking for tomorrow. Uber prices IPO at 45 shares at the low end of the range. So this is good. I think it's kind of smart, and I think they could throw us a bone here if they price it low and let kind of the market and the hype. I think it's very smart. Or again, you never know though, but if it prices below, remember, these guys didn't price below. Levi's priced slightly above, but what's bad about that is it could show lack of demand, or investors think it's too high, because even though you guys are like, oh, $45 per share is not high. Well, here's the key now. Like I said, supply and demand. If it's pricing at the low end of the range, think either supply and demand. It's not that nobody wants less money, right? It's who's willing to pay for it. So you have to think, because there's going to be 180 million shares, and then an additional 27 million shares for the underwriters. So we're not going to get into what that means, or, it's an option for the underwriters, but factor, and this is all the underwriters are your market makers trying to make sure this goes smooth. I think Jim Cramer blamed Lyft IPO. I don't know. Some people did, but it's going to be 180 million shares. Just pretty much add this, about 200 million shares at $44. So that gives them that like $8 billion range, or total IPO, I believe. Oh, 82.4 billion. Excuse me. So a little off there. So it's going to be crazy tomorrow, but that's what we want to look for. So if it's pricing at 45, here's the thing. If it doesn't meet the range from the banks, it's not going to hit. That's the thing. So even if it prices at the low end, even if they sell less than that and it goes lower, the chances are it's not going to hit below that. Especially, there's going to be a lot of hype, because again, I don't know if I told you guys this. I think we got to go back. The whole key to even pull off the whole sell your shares, I'm saying 50, 100%. IPOs can move like that. Again, look at Beyond, and again, that happened through a swing trade. So you're going to have to scale in and out even throughout the day or two, and again, you'll be able to justify and see how that works out. But you need a big move to happen on the IPO. So that's why, again, we're looking at the supply and demand aspect of it, and that's why it's good to have the hype on it. But then this is all still factoring in the price, as you could see. So we know there's going to be $45 a share. That's at the low end. So you want to see, okay, that's probably going to fill, and it's not going to price below that. It's how much above 45 does it hit the market. So that's what I'm saying. If it hits the market at 60 or 70 on 180 million shares, they're going to raise 82 for that's here. You got to realize that $45 per share of those 180 million shares, that is that 82 billion. So if they get 15 more dollars per share, you do the math, that's even more, and that's even crazier for Uber. So that's why the lower the better in a way, because it could at least leave more upside, because even if they do get price at 15 above when it hits the market, that's kind of what happened with Lyft. People will still, it could drop and people will buy it a lot because supply and demand, then I wouldn't touch it. But if it prices a little bit above 45, it look good. But if it prices at 45, I don't know. But that's the first part. So if it has that, and now 180 million is what we keep in mind. So those are the criteria right off the bat that we're watching even before anything. And now when we get into the trading, and you're going to see it's going to have to do with volume, because like I'm saying, it's the first day it's trading, supply and demand is important. Keep that 180 million in mind, and now you want to see supply and demand. Usually what I've noticed with IPOs, if the price is going to do good, you want to look for what I call the float to turn, which means all the available shares, those 100 million, 80 million shares that they're selling, you want everybody to buy it, because once that volume goes through 180 million, and even by looking at the volume counter, it's a very gross metric. So that's why I say you be conservative with it, but it could give you a general idea, because again, there's people day trading and not everyone's holding it. But if the float turns and 180 million shares go through, that's a good sign. The more volume, the better, because think about it, that's just more demand. And if it's the first day of trading, this supply is literally limited to exactly how much. So that's why if even the more it goes, the more confirmation you get. It will confirm price. That's the issue. It doesn't have to always mean it's going up. Lyft could be an example of that. So supply and demand determines price. So price could go up or down. So that means if the supply if there's too much supply at a certain price, the market's going to come down, and that's where it's going to, the price comes down to meet the demand, hence lift. So that's what we're looking for, and you want the float to turn. But now how can you tell if it's going to turn and when to get in? Well, this is what I do. It involves scaling in, and you start with 50 shares on it, but I wait for the first 3 to 5 minutes. So you watch for the first 3 to 5 minutes, and depending on how much volume it does, that's pretty much going to give you a general idea. If the stock could do 50% of the float, so in this case, we need to see on Uber 90 million shares go through in the first 5 to 10 minutes. And again, the first 3 to 5 minutes as well, too. Even if we could get like 30% of that, I guess, or 30% of the entire float, that would be decent, but that's what I'm looking for. The slower that is, the less likely that it's going to be there. So it's kind of, again, in that this doesn't always work, and I could be late on it, and we'll see, but that's usually what I've seen so far in my years of the IPO. If that's not happening and there's not that much demand, it's probably not going to be able to push through that. There's going to be more shares left over that need to be sold, and if you're not seeing it get bought up or people buy it, and then that's the part is, if you see the option, that could, again, little events could ruin or make or break it, because if it drops really fast and a lot of people buy at a certain price, again, the volume weighted average, the VWAP is actually very, very important. So there's a technical for when you could look at this, because again, the VWAP makes sense in this scenario with supply and demand. It's very, very controlled when you're looking at it. So that's what you're going to look for, and we're going to watch that. But if it could do 50% in that first 5-10 minutes, eventually it'll look good. I'll scale in around there with 50 shares. Watch how long it takes to be able to turn 75 or 100% of the float. But usually, too, if you know it's going to really, you could even wait all day. Who cares what it does? If it's about right when it gets around 180 million shares, watch it. And if it is going to go in that up on that direction, you could do this. And the whole plan is with 100 shares, so you scale in 50 shares at a time. That's 2 orders, or you could do 4 orders at 25. You put in $4,000. The idea is let it go up, sell 25, 50%. And you get your shares, you get your money back, and you get the whole free shares, give it to your kid, and it's a pretty amazing strategy. Imagine being able to, imagine the guy who said, hey, I invested in McDonald's the first day it came out. I invested in Pepsi, Coca-Cola the first day they hit the stock market, Amazon, Apple, all those guys are really rich. So you'd be surprised. Again, they're 50. If you had 50 shares of McDonald's in the 60s, you'd be surprised what that would be worth right now. So, hey, get some free shares, even if it's 5-10% gain. But that's if it's there. So come on stream. I'd love to help you guys out with it. I'm really excited. Get ready for the watch list. Keep your eyes on the news. Keep your head in the game. And make sure you're subscribed. Let's go.